Yeah, I'm a baller. Yeah, the girls holler. Yeah, I'm a scholar. But I don't bother. Ooh, yeah. But you know we playing around here because you know we educated over here in these markets. But today we're not talking about educating in these markets. We're not talking about supports and resistances. We're not talking about all your trend lines and all of that, all your risk management. Today we're talking about a lack of risk management. You feel me, people? So what are we talking about today? Well, I stumbled upon a video where I saw somebody lost over 100K. And you know how it is. I'm chilling, I'm always chilling on the YouTube, surfing through the web, and I see, okay, I lost $5,000. I'm like, okay. You lost 5,000, but when I see the big 100K plus, my eyes open up and I'm like, what is that cartoon that's like, you know what I'm talking about? His eyes are like popping out of his head or whatever like that. That's kind of how I get. So you already know, I'm not gonna hold you up. Let's go ahead and get into this video and see how this man lost over $100,000.
A boom usually sucks a lot of people into a market. Oh my goodness. All right, so this is gonna be my first story time. I felt like I've done 18 videos already, so time to get personal. And I don't like telling this story, it's really embarrassing, but I want to do it because you can learn from my mistakes.
That's exactly what we look for over here, people. We look for embarrassing stories, you know what I'm saying? We don't hate, we don't all lost money in the market, you know what I'm saying? I woke up to a clean little $60 loss in the 300 to 30K account, you know what I'm saying? And by the way, guys, like, comment, and subscribe. I really got to get these subscribers up, guys. We got to get big. Pump me up. Pump it. But back to what I was saying, you know what I'm saying? That's what we're here for, embarrassing stories and opportunities to learn, because we want to see other people lose the 100K, so we ain't got to lose the 100K, you feel me? Because we trying to be rolling in them Lambos. Let's get it.
I did something very stupid when I started trading, made a rookie mistake, and this rookie mistake actually cost me $100,000. So please learn from it. I won't get that money back, but what I can do is prevent you from losing that money. So
I like this guy.
Here it is. It really started with my introduction to stock trading, which was in the late 90s, and what got me into it was a boom. A boom usually sucks a lot of people into a market. A lot of people just started investing because of crypto, I'm sure.
Y'all know I had to touch on this. I remember when Bitcoin was going crazy and the whole GME chicken tendies to the moon and stuff. I would hop on my Instagram. People that never had an interest in trading or anything was sitting there talking about some, hey man, like, y'all really need to step y'all money up. Like, y'all really ain't out here working hard enough. You feel me? Like, I'm out here getting like multiple sources of income. Like, I'm eating, and the rest of y'all really lazy. I'm like, bruh, girl, yeah. I ain't seen you on the market at all. You done hopped in Bitcoin, you done hopped in GME, AMC during the big boom, and now all of a sudden you feel like you trading. And you know what it is now? The market's going down. You know what I'm saying? You know what I'm saying, is going down. The market is not, well, the market is very volatile and crazy right now. But you know where these people are? Crickets, people. Crickets, where are you? I go on Instagram now, I don't see nothing like that. I could scroll all day for weeks and not see anything about trading, you feel me? Y'all should be ashamed of yourselves.
So it started with me with the internet stock boom, and for those who are too young, it really started around 97, 98, but I didn't jump in until 98. And at the time, I was 4 years out of college and 4 years into working.
My boy was a stud.
So I was single, and I had built up a little bit of a nest egg since I was single and I was in a good paying job.
Okay, I see you.
I only really spent about half the money that I was making, so I just put the other half in a bank. I heard about investing. I even thought about investing, but I was like, I don't know enough about it, so I wasn't interested in it. So I was just happy to see the money sit in the bank.
Okay.
But then all of a sudden, I started hearing about something called internet stocks, and these internet stocks were like tripling in a day. So I'm thinking, okay, I currently have 40,000 in the bank, and I could.
He said, I want some of them juicy chicken tendies. He was envisioning it. He was picturing it. The Wolf on Wall Street, you know, throwing cash, just throwing money, just throwing hundreds off the boat. He was picturing it. He was picturing the girls. He was picturing the lifestyle, and he was like, what's up, Microsoft? You looking good. He swiped right on Microsoft, and Microsoft said, what's up? Let me stop.
Triple that to 120,000 in like a day or a week or whatever. It's like, all right, I gotta look into this. And also, another driver was around the office. People who are older than me who are already kind of investing, they started investing their money in these internet stocks or whatever, and they start getting like, you would hear people screaming, I just made $10,000 today, I just made $15,000 today, and I'm thinking that's 3 months salary for me, 3 or 4 months salary. So it's like, all right, I gotta get into this. So
what we're seeing here is a classic form of 1990s FOMO. Yes, FOMO is not new, people. FOMO is not new at all. If you don't know what FOMO is the fear of missing out. Basically, you do something that you wouldn't normally do because you don't want to miss out. You know what I'm saying? It's like normally you're not the type of guy that goes to a party or anything. You're in your bed, you got your chicken wings, you got your bucket of, KFC, forget KFC, Popeye's chicken, or some Bojangles maybe. But anyways, you got your Bojangles chicken, and then your friend calls you up. He's in the club. He's grinding on a girl. He's like, yeah, man. Hey, you should have pulled up. Or he's got his drink in his hand. He's spilling it. He's like, yeah. And you like, well, bro, like I'm eating my chicken wings. He got a drink in his hand. He got a girl on him. He got a chicken wing in the other hand. He like, I got chicken wings too. And you like, you throw the chicken box to the side, and what you do? You Naruto run into the club now. That's FOMO. So essentially in the market, all FOMO is you see other people making money, you see your guru making money, so now what are you doing? You hopping in the market because you want to make that money, which can result in large losses, as we can see here.
Here's the problem. First of all, I did no research, none. I just heard people yelling about companies rising 10 or 15%, and then I would just invest in those companies because I thought, why do research if everything's going up? Mistake number one, you always want to do your research. It doesn't matter how good the markets are. You always want to, it's your money, it's your life savings. You don't, you would do a lot of research if you're buying a dishwasher, and people do no research when they're buying a stock. So do your research, very, very important. So didn't do any studying. Second problem, I just put all my money in tech stocks. I knew nothing about the stock market. If I did, I would have learned that 66% of stock market professionals can't beat the S&P 500 over a 5-year period, and 90%
I didn't know that.
of stock market experts can't beat the S&P 500 over a 10-year period.
I did know that.
The logical thing is put your money into an S&P 500 fund. Didn't know about that. I was just an idiot.
This is a great time to talk about index funds, people. One of my favorite things to invest in. You know what I'm saying? Pretty much what he's saying here is he's saying that, like, pretty much even, people who are big in the market, hedge funds, things like that, they can't just beat the overall movement of the S&P 500. So it's better, you know what I'm saying, to just kind of go with the wave, go with the trend, you know what I'm saying, have some long-term investments, you know what I'm saying, just kind of hold on to it for 30, 40, 50, 60 years, give it to your kids, and you know what I'm saying, they gonna sit around and blow it all at the gambling or something. But hey, you know what I'm saying, you did what you had to do. But yeah, guys, the lesson here is if you're really looking for ways to protect your money, obviously you should do things like fill up your Roth IRA. But another good way to do that is definitely to look into index funds. Why? Because it's a collection of funds. It's a collection of stocks. So let's say one stock booms, you're still good. Or one stock tanks, you know what I'm saying, you're still good because it's just one of the overall pack. And as long as the overall pack is moving in a green direction, then you're going to be having green days, green years, boom, bada bing, bada boop. Buy some index funds, people.
At the time, I don't know the full list of stocks I bought in the 90s, but I do remember buying America Online, Amazon, Apple, Yahoo.
Oh, those are good ones.
I kept my portfolio about 10 stocks, and they were all internet stocks.
Now, some good ones in there.
In less than 2 years, and I started 1998, from 1998 to about late 1999, I more than doubled my money. My portfolio grew to $140,000 by late 1990. And I was like, oh my goodness. I started thinking that at this rate, in 5 years I could have $1 million bucks. I could literally retire before I'm 30. So all is going good. And then the tech market began to crash in March of 2000. And I saw my portfolio falling like $5,000 a day. And I was just like dazed. I didn't know what to do. I didn't want to sell. I'm like, I'm losing all this money. I'm losing like over a month's worth of salary in a day. But the only reason why I hold out was like, okay.
Bruh, shoulda got out, shoulda got out, shoulda just took them gains, shoulda just took them gains. But yeah, you know what I'm saying? Especially when something's moving like that. He said he doubled his money. You kind of want to hold on to it, but you got to always think like, what glitters is not always gold. I got to come up with some quotes, you know what I'm saying? I got to come up with some, you know what I'm saying? Like, when you're flying in the clouds, you can only go so high. You guys like that? You get it? You guys get it? It's like when you're flying in the clouds, when you're making money, you're making a lot of money, but eventually you're going to reach a point that you start losing. You can only go so high. Okay, back to the video.
So maybe I have to give some of those gains back. And I held on, and that was actually a good thing that I held on. But here's the problem. The market kept falling and falling. I kept losing more and more money. I became more and more scared, and I panicked, and then I sold. And I sold everything. When I sold everything, my portfolio, I only had $20,000 left in my brokerage. So not only did I lose over $100,000, I lost $20,000 of the principal. So altogether, it was really $120,000. And I got burned so bad that I didn't get jumped back into the stock market for another 3 years.
Sheesh, stock market broke this man so bad that he didn't enter for 3 years. I think my biggest, hiatus, if I use that word correctly, from the market was probably about, I think three to 4 months or something like that. But yeah, the market pretty much said, you can't hang with us, you know what I'm saying? But the real thing that I'm thinking here is, I'm not considering this a 100K loss. I consider this a lot more than that. Think about it. Think about if you, in the early 90s, had Apple, Amazon, and Microsoft, and you panic sold. Just think about that. Think about what that is today. This video was made 3 years ago. Think about how much money he would have if he held on to Amazon, Microsoft, and Apple up until now. This man would be rolling in the cash. So I'm considering this well worse than that, well into the millions. Like, oh man, that's gotta hurt. Like, imagine doing this, panic selling those stocks, and then waking up every day in 2020. That's gotta hurt.
Till 2004, and in those 3 years' times, I actually started doing research on investing. I learned. I basically put myself through university.
That's what you got to do.
3 years, so that was actually a good thing. So, from what happened to me, I just want to give you this quick lesson. Before you invest, learn, read about anything about stock, even if it sounds like the most stable stock in the world. Just learn. Look for the weaknesses. It's like if you're buying a car, you want to know what could go wrong with this car. A lot of people right now are investing in something like crypto, and they've never read one white paper on crypto. Also, you want to hold on to good stocks. A lot of the stocks I had in that tech portfolio were actually pretty good. AOL was bought out by Time Warner, Apple, Amazon, Yahoo. Apple and Amazon were.
So this is something that we definitely see, in 2020 and so on and so forth. This is something I'm a little bit guilty of too, because I'm very much like 80-90% a technical trader, so I don't always look at the fundamentals, but I understand the importance in the fundamentals. A lot of people are getting into crypto, NFTs, things of that nature. They don't know what they're doing. They're literally like closing their eyes and like, buy, Jim Cramer, buy, you know what I'm saying? And then when they get beat down, they're like, oh well, you know what I'm saying, it's that man Elon Musk's fault. Like, I don't even know why he had to put that tweet out here. I was about to be eating tendies, man. I was about to be eating tendies with the sauce. But yeah, you got to do your research, people. You got to know what's going on. And also, he said something else good. He said, He said hold on to good companies. People like they're so into trading nowadays, and I completely get it because I'm very much a trader too, but I'm also an investor on the other side. I have an account where I do very, very slow investments that I plan on holding for 30, 40, 50 years. Possibly they'll never get taken out and they'll just go down to, some little Jordans. Imagine like a little me. He's like, use your stop loss. Let me stop. But you get it? I have that, and then I have accounts for other things. I have accounts for swing trading. I have accounts for day trading. I have an account for crypto that is getting cobwebs on it because I'm very afraid of crypto and I don't understand it. But hey, maybe one day I'll throw at least $1 into it.
2 like monster winners out of the 10 that I had. I don't remember the rest. I might have had like Cisco and Microsoft, but I just don't remember. But I would estimate if I had held on and never sold throughout that crash and held on today, I would have easily had $2 or $3 million.
I said it.
Just those 10 stocks, and most of those gains would have came from
Amazon
and Apple. But like I said, I panicked and I sold, I believe, in like late 2001 or 2002. I stayed out of the market for 3 years, but I did spend that time studying the market. I read about 20 investing books, and I subscribed to a bunch of podcasts, and I even bought a couple of courses to teach myself about investing. That's where I learned that you can't beat you can beat the S&P 500. It's very hard. However, if you want to guarantee yourself the best gains over a long-term period, you put the majority of your money in an S&P 500 fund, low-cost index fund, and you'll be fine unless you're Warren Buffett. You're going to do as good as you are going to do over a long time frame. So, like I said, since 2004, I've kept the majority of my money in the S&P 500 index, and I think I've done better than I probably would have done if I put my money in any hedge fund or done anything else. So what I would suggest is, as far as the lesson on how I lost $100,000 in the stock market, is always do your research, even if everything's going up.
Always do your research.
What the vulnerabilities are. Don't panic sell.
Don't panic sell. And stick to your plan.
Just don't be dumb with the money. Just don't throw your money at anything just because it's going up. Always look for the viable, the good and the bad. Do your research. Okay. Hope you.
There's a lot of lessons here. There's a lot to unpack about, educating yourself, knowing where your money's going, all of that, not panic selling, really sticking to your trading plan. Now, I'm going to have to say, you guys may think differently, but the way I'm thinking is, this may have been the worst trading loss that I have seen and that we have seen on this channel. If this man had stuck to his plan, he would have made probably $3 million. I'm honestly thinking possibly even more than that, just being real. But and normally I'd be like, okay, well, of course you take your profits. But this man's plan was to hold. And since his plan was to hold, essentially I'm seeing it as a loss in opportunity cost. If you guys don't know what opportunity cost, it's like money that you didn't necessarily lose, but because you had your money somewhere else, you weren't able to put it into there, so it's kind of a loss. So, oh man, this is terrible, but there's a lot to learn about this. There's a lot to unpack with this. And I'm happy that this man has, really figured it out, got back together. He said he started retrading just S&P 500 since 2003, so he probably has a whole bunch of money now. Honestly, if you just were investing in 2003 and you just kind of leave it in an index fund up until 2022, then you're probably good. You know what I'm saying? Maybe not driving like Lambos and everything, but he's probably doing relatively well for himself. And I can say, since my camera quality has been hitting lately, he should probably buy it. You know what I'm saying? Get himself a camera. And you know what I'm saying? I like what he talks about. Maybe I'm gonna check out his channel, and you guys should too. I'm gonna link it below and all of that. But you guys be blessed, you know what I'm saying? Have a great day. If you guys enjoy this content, make sure to like, comment, subscribe, and all of that. You know what I'm saying? I'm trying to get to a K. What you mean? I'm trying to get to 1,000. Just like anybody. What you mean? Get me to 1,000. I'm just playing, but y'all be blessed. You know what I'm saying? Have a nice day and use the stop loss, people.